one of the easiest ways to maximize the value of the business is to pay taxes and prove all the income that you're really making. So when we go to a buyer, we can hand them the tax return and say, there you go. Any questions? Take a look at the tax returns. It makes us be able to command a premium instead of it being like, where's Waldo with 5 different spreadsheets trying to add it up.
Welcome to The Boost, a podcast for home service contractors. We explore leaders and innovators in home services, their personal journeys, thoughts, and experiences with growth, marketing, and succession. We cover the good, the bad, the ugly, and its ultimate impact. Welcome to another episode of The Boost. I'm Zach Wilson, Chief Marketing Officer of Local. Today, we have Patrick Lange, Managing Partner from Business Modification Group. Drum roll. So Patrick, we were a booth away for a lot of days in beautiful Arlington, Texas.
Absolutely. It's nice to be on the screen with you once again.
The only thing I could really see from where I stood was your left earlobe. So this is a little different perspective.
Definitely. And I turned around and got to look at a beautiful stadium I couldn't go into because we were both working.
That was pretty wild. I couldn't get over how many stadiums there were. So Texas built a new baseball stadium and they had their old one right next door to it, Rangers. The story was, I guess the old one was just too hot because it was not domed. So they built a new one, but the old one looked brand new.
And that was going to be my point. When I pulled in on the Uber coming from the airport, I said, well, that must be the stadium. And my Uber driver said, no, that's the old one. I thought, the old one, it looks brand new. I can't believe the old anything. So yeah, I didn't get to see the inside of either one of them, but hopefully on another trip back, it'll be pleasure instead of business.
Yeah, I guess someone local said by the end of the third, fourth inning, the stadium was empty. People just couldn't handle it. The sun was just too blistering. So I guess they read the writing on the wall. I quickly said, I was like, this is such a travesty. You've got all this beautiful weather. And of course, we're talking end of April, early May, and you've got a dome over. What a waste. And someone quickly corrected me and they're like, yeah, try and put your butt in a seat in mid-July and you'll see why they have a dome. And they said it's horrible. So
I'm in North Florida now, but I was in Central Florida and we could watch the Rays play. And certainly weather plays an impact on that. And obviously it rains a lot in the summertime. So it would be a nonstop rain delay thing in addition to the heat, I'm sure.
Cue the conversation now for what we're here for, heating and cooling, right? As we're saying, it's a travesty. It's also a blessing for the heating and cooling industry and those commercial contractors that get to do those fun, ginormous projects and solve those big problems at scale. Aside from baseball, we're here to talk about Business Modification Group and your history, what you do, what you bring to the table. Let's just start with diving into your quick backstory and how you got where you are today.
Yeah, absolutely. So I won't go too far back, but I've been a broker.
You're dating yourself. We only have a certain amount of time here.
It could be a long story. So I've been a broker for probably 14 or 15 years by now. And we moved from Central Florida to North Florida. I've continued selling businesses. And my youngest son played baseball. And somebody in his high school baseball team came to me and said they had a heating and air company. And they wanted me to sell it for them. And I sold everything. Bars, restaurants, gas stations, flower shops, you name it, I sold it. So I listed it. And when I was doing the listing, I thought, wow, I love businesses with barriers to entry. I love things that are relatively recession proof or recession resistant. And so I decided to buy the company myself. Instead of going to market, I bought the business. Ran it for 2 years. We were fortunate to grow the business. But in that period of time, I also realized that I don't belong running a heating and air business. And so when I went to go sell it, I couldn't find a lot of useful data on the industry. And I thought, well, if a broker like me, and I was still doing brokerage as I'm running this heating and air company, if I can't find good data, how in the world is somebody in the trade is going to find out what their business is worth or what should be included or how the process goes? So at that point in time, it's been probably 6.5 years ago, I decided to change my business and say, I'm just going to sell heating and air. My son, who worked for me at the time, actually bought my business. So my son runs the company today. Until about 3 weeks ago, my office was in his office. So I'd been around the industry the entire time. And I just started selling heating and air. Based in Florida. Initially, it was just in Florida, then Florida, Georgia, then Southeast. And COVID was actually very good to my business. So I could fly around the country and be the only person on the plane for next to nothing. It's kind of crazy. I was flying round trip from Gainesville, Florida to LA for $250. And it was like first class the entire time. And so rental cars were cheap, hotels were cheap. So I expanded, and I've been fortunate. In the last 6 years, I've sold just over 120 heating and air companies and been part of a lot of transactions on both residential and commercial, both buying and selling. And that's what I do full time today.
So, just in the interest of our audience and people that haven't gotten as far as talking to a broker or thinking about selling their business, can you just explain the role of a broker or the value of a broker for a heating and cooling owner who would be looking to sell their business? Why would they call a broker, not just Patrick, but a broker in general specifically?
Most of my clients have never sold a heating and air company in their life. And most of my clients, it's the biggest sale of their life. And so the thought of going into a transaction that's the largest financial transaction you're ever going to make, and you've never done it and doing it yourself, to me, reality is rather foolish, I would think. And certainly scary, if nothing else. So many people come to me just looking for a valuation. Many sellers ask the person trying to buy them what their business is worth instead of knowing the value of their business. So I offer everywhere I go, everywhere I speak, everything we do, I'll do a complimentary evaluation so at least you know what your business is worth. So that's the first phase, is identifying what's my business worth. Second phase is what are buyers looking for? If I'm not going to sell for 3 or 5 or 10 years down the road, what should I be building my business towards so it can maximize the value? The third thing is confidentially finding a buyer. So I often joke the hardest part of my job is to let everybody know your business is for sale or nobody know it's your business. Finding quality help is a challenge. And if you went to your staff and said, hey, in 6 months, I'm going to sell my business, chances are they're going to panic and run for the hills. Or your competitors are going to find out and come try to steal your employees. Everything we do is confidential. There's some art and science to it, but it's finding the way to get it in front of the most amount of qualified buyers as we can without everybody knowing that it's your business that's for sale. And then I hold their hand through the transaction. So from start to finish, initial phone calls, signing non-disclosure agreements, doing the due diligence process, working on contracts and getting ready to sell. And then, like I was fortunate to do yesterday, showing up at the closing table and everybody cashing check. So depending on what they're looking for will dictate what's their reason for call a broker. Is it just evaluation? Is this deal good for me? I have a lot of people that'll call me and say, hey, I've got an offer on the table. What do you think of this? Or I'm looking at buying this company. What do you think of that? And so because so many people, as a business owner, to me, you're kind of often a lone man or a lone woman on the island. And you can't go to your competitor and say, hey, I'm thinking of selling my business. What's it worth? Or you can't go to a complete stranger. And so we offer that to try to be a sounding board, because in my early part of life, I owned a financial planning company. And when I sold that business, I made every mistake you could possibly make. And now I try to help people from making those mistakes.
Yeah, well, that's good. I've talked to quite a few people on this podcast now, and honestly, a lot of people have said the broker side is a very neglected segment, meaning there's a lot of opportunity there because there's a lot of inventory that is not very educated and savvy, I guess, not very experienced at what they're doing. From what I understand and what I've heard is that someone coming to the table that's had a lot of experience, done a lot of deals, and isn't just, I don't like using this sort of used card sales intermediary, is hugely valuable, because bringing that expertise can add value, and value means dollars. That's ultimately what a seller is looking for, right? And someone that can objectively value their business and represent them to get, again, the most money for whatever they've injected their blood, sweat, and tears into.
And the protection. I mean, you think there's a lot of liability that comes with selling, both selling and buying a business. And so making sure that all your I's are dotted and T's are crossed as you're going through the transaction. I go to a lot of trade shows, a lot of events, and I have so many people that come to me and say, I wish I would have known you 2 years ago or 5 years ago, or whenever I sold my business and here's what I got. And I'm thinking, why in the world would accepted that offer? And their answer was, they didn't know any different. This was the offer. It seemed like a fair deal to them, and they had nobody to bounce it off of. It's like asking your barber if you need a haircut. Asking the buyer what my business is worth is the wrong person to be asking. So I try to be that voice of reason. Once again, even if they never do business with me, at least they have something that they can go back with that says, I've got a point of reference of here's what it should be worth in today's market. I told you I owned a heating and air company. I can't fix air conditioners. My son can. So when my air conditioner breaks, I call my son.
Right. Maybe not as far as operating on yourself, but pretty close. You just don't have the right perspective and the right angle on things.
The financials in a sale, to me, are the easy part of the transaction. Mathematically, it didn't make sense, or it doesn't. Once you know what the figure needs to be, that's the easy part. It's all the other stuff that comes with it. And now you're emotional and you've got 20 or 30 or however many years in the business, your kids were raised in there, and you're not always thinking logically.
Emotion is probably the most dangerous thing. If you haven't sold a business or bought a business, the next thing down, that's the biggest purchase or transaction of your life, is what? Your home. And it's the same thing. Anyone that's ever bought a home, it's the exact same thing. You can't get out of your own way because you get emotionally invested in the color, the smell, the look, the trees, the wallpaper, the carpet on both sides of it. If someone comes in your house and tells you they don't like their carpet, and all of a sudden you're offended, and it's like, who cares? Buy the house and you can do whatever you want with the carpet. It's the same with the company. They don't like the culture, or they don't like the training facilities, recruiting, management, whatever. It's like, doesn't matter until either buy it or don't, right? That's your choice once the sale's done. So what would you say? I know the answer to this question, but I'm going to try and phrase it if I can get it out of you correctly. So what would you say law of averages, let's just say law of averages, in terms of the HVAC deals that you've done, is the most common terms for a deal? All cash, 50, whatever, like law of averages, most common purchase or selling terms.
So 90% cash up front. So probably 90% of the transactions. I did 23 deals last year. 90% of them were probably either 90 to 100% all cash. And the 10% holdback would either be the buyer was using SBA financing and SBA requested the seller to hold the 10% note, or if it was a private equity group buying it, there was an indemnification clause where they kept 10% holdback for that indemnification. Very little financing on my end, very little earnouts. I know at the upper end of the market, there's a lot of people who do earnouts. So there's a lot of private equity watchers. They'll probably be cussing me when I say the next part. I'm not a big fan of earnouts. I think in the private equity space, there's some great companies who are doing great things in the heating and air space, and they're incredible operators. I also think that there's a lot of people who are good at raising capital and don't know anything about running a business, especially running a heating and air business. And most of my clients, when they come to me, they're not a young person looking to flip and get on to the next thing. They've worked for 20 or 30 years and they're ready to retire. And I think your risk profile is different if you're 40 years old and selling your company that you've grown to sell versus you're 65 years old and you're selling your company to fund your retirement and you're ready to be done. And so I think there's an element of risk with the second bite of the apple that's often talked about and financing a transaction. And I'm okay betting on these operators that are out there gobbling up companies and have operated a company. What I'm not okay with is betting my retirement on a 23-year-old Harvard graduate that had a bunch of rich friends that raised capital and is buying companies and doesn't know anything about operating them. And I think maybe I attract those sellers from my take on that. And I just don't do a lot of deals that are anything but cash. I do have a few deals a year that I'll do younger people that say they want to roll equity or they want to remain part of it, for very few of my clients.
So just to summarize this, I think I get it. And if I can try and summarize it, if you're younger, it's more appealing to leave some money on the table and roll the dice, if you will, in the next operator. And if you're older, it's less appealing in your purview because, and I'm going to put words in your mouth, because you might not live long enough to actually reap the benefits of that investment that you're still invested in.
100%.
Yeah. Okay. That's what I thought. I more or less wholeheartedly agree. I think on the younger side, which makes it easier or more interesting, is if you can maintain at the C level of the business and actually influence that, you still have control over some of that growth and some influence on some of that growth. And therefore, if that were me, I would want to be involved in that personally. And frankly, it might give you a lot of opportunities if you're in that position, because now you've got more support behind you. You might have more expertise, assuming you're right with the right group. I'm going to pull a non-private equity, Hoffman Brothers, for example, right? They've got a ton of expertise behind them as a good example. You're just going to get a ton of support. You're going to get a ton of infrastructure. And then lastly, the most obvious, obviously, is capital infusement, right? So, and just things you might not have been able to do. I guess buying power too would be another one. So I think it could be really interesting and fun if you get the right partner. And you said something earlier, and I think we glossed over this at the beginning, but just so we're all clear, where does your perfect partner start and end? Let's just call it top line revenue.
The bulk of the deals I do, companies are doing sales $1.5 million to 7 or 8 million. I'll do 2 or 3 a year in the 10 to 20 million range. 2 a year. but the bulk of what I do is smaller size companies. And I think for a couple of reasons. One, there's a lot more of them, right? I'm in a business of volume, and there's a lot more people doing $2 million in sales and $30 million in sales. And the second part, I really think those people need my help the most. If you've built a $30 million company, chances are you're a pretty savvy business person, or you're super, super, super lucky. And I'm going to lean more towards a savvy business person. And the second part is it's harder to sell. And so if you have a smaller company, we have to physically market it. If you have a company doing 20 or 30 million in sales, I could call up 5 buyers and they can have a bidding war right now. If you're doing $2 million in sales, we've literally got to go to market and try to find a buyer to bring to the table to help buy your thing. And so I think from a volume and a need standpoint, that's typically where I live.
Yeah. Yeah. And I would agree because as you go upstream, as you said, nothing on the downstream by any sense, but upstream, you got there for a reason. There is some serendipity and some luck, but most likely you're doing a whole lot of things right. And you're a pretty astute, savvy operator, which means they probably need less help, like you said.
Or have a lot of people around you who are savvy and smart, right? Not always necessarily the owner. They just may be surrounded by some pretty intelligent people, but there's business knowledge somewhere in the organization.
Right. I'll go so far as to say is I will give those people credit for being savvy and smart by hiring more savvy and smart people. Right. You're no dummy if that's how you build your business, right? On the sales side, again, law of averages, 90% or higher. Who are most of the buyers? Are they private equity? Are they other operators looking to grow? Acquire?
So it's moving. So last year was 50-50. When I first started selling just heating and air, I think the first year I didn't sell one to a private equity. It was all mom and pops buying other mom and pops. And then it went to more private equity. Say 2 years ago, most of my deals I grouped private equity and financial buyers kind of in the same mix. So a bigger conglomerate getting bigger. Last year, 10 of my sales were to private equity firms. 5 or 6 were to mom and pops buying other mom and pops. Could be kids getting in the business, wanting to expand to another town. And then 7 or 8 of them were either a financial buyer who had some backing and wanted to get into the space, or they sold their company and wanted to get back into the space in another town, that type of thing. And they came from outside kind of getting back in.
That's an interesting curve, I guess, in terms of how it's moving. And so let's just look at them all. Private equity first. So these are smaller companies, right? Generally, again, under 10 million that you're selling. A private equity coming in to buy a less than $10 million company is looking for what? Number one thing, what are they looking for? They're looking for customers. They're looking for brand. They're looking for techs. They're looking for operator.
Yes.
This is a multiple choice. You can only choose one.
If I'm rating them, and they would be better to answer this than I, but what I see, customers first. And so if you're a company doing 100 million or 200 million or 500 million, and you're able to get a customer base just from your cost savings alone, the business that's being done, you could automatically add 20 or 30% to the bottom line. So for them, getting those customers, it's immediately profitable, right? When they buy it, just from their cost savings, that's there. Second thing I think is the employees. I've mentioned earlier, the hardest part in the industry currently is finding quality help. And so if you have long-term quality employees in place and they're able to bring those in, that's extremely important. Mixed in with that certainly is going to be brand or reputation. They're wanting to make sure they're buying a quality brand and a quality reputation. And then the fourth one, I don't remember what your fourth one was. But so I think it starts with customers, then goes to people, then goes to brand, then goes to everything else.
Yeah, I think the fourth one was just like C-level operator, owner, savvy. That's probably, as you prioritize it, pretty low. Okay, same question for an acquisition. Same order?
So I think an acquisition location is much more important. When I started dealing with private equity more, they were very region specific, only Southeast or only Southwest. And now it seems that they've been gobbling in so many places that now it's opened up the floodgates, and location's important, number of people, demographics, that kind of thing, but probably not number one pressing priority. Where I think if it's an operator in Florida and wanting to get in Georgia, or where in Georgia they are is going to dictate how important that is. A small operator looking to start buying is not going to say, what do you have in Colorado? What do you have in Arizona? They're going to say, what do you have in this specific area? And then that other stuff is going to fall in place.
So the third group, which I'm not sure which portion this represents, but you put them into private equity, but for argument's sake, let's siphon them out. Someone looking to, whether it's a financial person, like you group them with private equity, or just an independent person looking in to come in to get the business, what should they look at in terms of what the value, Joe, first time business owner, wants to get into HVAC. He's an operator, whatever, or wants to be an operator. What are the things that he should really look at in terms of evaluating the business? Because it's not going to be, if you're looking to acquire a business and you're local, you're looking to expand your location, let's just say you're on the south side of a city and you're looking to go north, east, or west, or whatever. PE, we already talked about that, but a new owner, maybe they're a tech or something like that. What should they be looking at in terms of how to really value the business and find a business that's right for them?
First thing they do, rightfully so, is price. If you're a private equity group doing $1 billion, $2 billion in sales, you can technically overpay for something because of your cost savings, what you're paying for equipment, insurance, whatever CRM system you're using. All these things costs are substantially less. And so you're able to shave money off the top. If you're a smaller guy or somebody getting in, or girl, you're not going to have any cost savings.
Right.
Their purchasing power is your purchasing power. And so where you buy the company at what price point, I think, is extremely important. And I think with a business and a house and in stocks, money's made when you buy it, not necessarily when you sell it, if you're looking at buying and selling on that side. And if you overpay at the beginning, you're going to be chasing your tail the entire time. And so good price point, staffing becomes the next thing. So a lot of these bigger guys or girls have staffing systems that they can send in. And if you're just getting in the space, you're going to need to make sure that you can attract and retain the staff that's there. One thing that I see, and that's where I see with a smaller company especially, is lower hanging fruit. If you look at a company doing 10 or $20 million, it's typically going to be fairly finely run. They're going to maximize sales opportunities. They're going to have a sales system in place. They're going to have a CRM. They're going to do these other things. A smaller company, $1.5 million, $2 million in sales, often doesn't have maintenance agreements, maybe has a CRM, but's not using it, doesn't have a salesperson in place. And so there's a lot of low hanging fruit in those businesses to look at. I have a lot of people that call me looking for $1.5 million company that looks like a $15 million company. And they don't exist, right?
Yeah.
They're going to say, well, why don't they have 1,000 maintenance agreements? Well, because they're doing $1.5 million in sales and they've only got 4 people. They come in from the outside looking for the unicorn that doesn't exist. So that's where I think there's opportunity.
I find it hard to imagine that you don't laugh as loud as I just did when you get those calls.
It's 10 times a day. So, the humor starts to wear off.
Just make sure you hit mute before you chuckle too loudly.
Absolutely. But it's common. They call me and say, well, they don't have a general manager. No, they don't have a general manager. There's 4 people. Who are they going to manage? The owner's there. They don't have 3 license holders, 3 people that hold a state license. No, why would they? The owner holds a license. So I think some people coming in and vocalize their ignorance unintentionally, but it happens a lot.
So this is a good segue too. Are there still diamonds in the rough? Do they exist? Can you speak to any of them or talk about that?
Lots. Yeah.
Really? Okay.
Yeah. I think at the lower end of the market, here's the reality though. It's going to take work. You're going to have to roll up your sleeves and work. There's not going to be this GM in place who's going to make everything fantastic and you're just going to sit back and look at spreadsheets. So if you're buying a business at the lower end of the market, you're going to have to put things in place. You're going to have to install a CRM system and learn the tracking. You're going to have to teach your technicians or a salesperson your system of selling, maximizing opportunities, delivering value to the customer. I think we've come from some great times in heating and air, and we typically have a kind of a once every 10-year run and then a once every 10-year run, and it's relatively cyclical. And so we've had some good years where it didn't take a lot to make money in the heating and air space. I think now we're in more of a repair versus a replace mentality. And you better be able to fix an air conditioner. You better be able to deliver good customer service. You better show up when you're supposed to, how you're supposed to, talking like you're supposed to maximize those values. And so that takes work to put that into place. I think a lot of the people at the upper end of the market don't want to work. I don't want to say don't want to work that hard. They'd rather spend the money and have it already there. Where I think the opportunity is at the lower end of the market, in my opinion, it's easier to take a company from $1.5 million in sales to 3 million than it is one from 10 million to 20 million. Everybody you hire at the lower end generates revenue. As you get bigger, they start generating overhead. And so I think it takes work, but I think there's a lot of opportunities like that out there.
Yeah, just set aside organizational, you just said this, I guess, organizational complexities that come with doubling from 10 to 20 versus 1.5 to 3. You can get away with a large portion of that with a few additional resources, whereas 10 to 20, you're just on the bottom, you're going to be capped really quickly because that's twice as much work and at serious volume. So
it doesn't generate necessarily revenue. And that's the thing. You start hiring a general manager and a service manager and an operations manager and an office manager. Those people are not out turning wrenches generating revenue.
Yeah, 100%. What do you think, given last year? Did you say 28?
23.
23, sorry. Trying to lift your numbers here. We're now in officially Q2. And how are we trending compared to last year, or how are you trending from a volume and deal movement closure activity? Do you have that stuff? Do you know that?
I'm on pace to beat last year.
So, and is that a function of Business Modification Group doing more, or is that a function of the market, or both?
I think it's both.
Both.
I think we're positioned better. My youngest son is a senior in college, graduates a couple weeks. He's been working behind the scenes for me for 2.5 years. So he'll come on full time in 3 weeks. And we've hired other people to handle some more of the workflow behind the scenes. So I think that'll help us be able to do a better job for my clients and more of them. But I think the market as a whole, I read somewhere one time, the only thing that likes change is the baby in wet diapers. And so there's a lot of changes coming in the industry, whether it's refrigerant, whether it's market, whether it's equipment. And somebody who's looking at the end of their career as opposed to the beginning often views that change as a bigger headache than it's worth. And so I think we're seeing more people say, instead of sticking around and making the changes and doing the things and learning what needs to be done, I'm just going to take my chips off the table. And you start looking at the age, and they've called it for the last few years, the silver tsunami that's coming. You know, you have a certain amount of the population that's reaching that retirement age from the baby boomers. So I think that'll continue to lead to volume. And I believe in the trades from an acquisition standpoint. So I think if you have a well-run company taking good care of your customers, there's always going to be buyers.
You mentioned something interesting. I guess the top end of boomers, depending on your definition of when they end, but topping out at, depending on the definition, between 60 and 19 born in 1960 and 1970. You're still working with boomers on the sales side then, correct? There's still a lot of those sellers out there.
If they're born in the 60s, they're going to be, in their 60s now, looking at that, retirement exit.
I guess it's safe to say, I'm kind of doing this in my head right now because you mentioned that group, but we're in the last wave of those, generally speaking. Boomers.
Yeah, I would say. In the space, a lot of the bigger companies sold are sold by younger people too. So I think I'm seeing these younger guys who sold for big dollars, and now their non-competes are running out. And now they're calling me saying, hey, I sold my company in New York. I've been to Florida and I'm not done yet. I want to buy a company in Florida.
That's interesting. So Xers and Y are coming back to the table. Are they looking in different markets from where they sold?
Yeah, because their non-compete is fairly restrictive in the areas they were in. And so they learned how to build a company to $5, $10, $15 million. So they have the formula to make that happen. Some that they've done it twice, and now they're looking at their third time. They'll go to an area, build it up, make sure the non-compete only covers that area, move to another area and do it again. They're cashing pretty big checks, and I think they like it. They like the building side.
Once you kind of have that formula, I mean, maybe not your second time, but if you're doing that a third time, I mean, that is a formula, and you can probably do that in your sleep. Frankly, you probably don't have a lot of repeat customers in this business, but there's some good repeat customers.
And now, and you had mentioned this earlier, one of the benefits, now they have money to throw at it, right? So when they were building their very first company, many times they were a technician turned business owner, and they scrapped and scrimped and saved to kind of get by and grow their business. Now they've exited at $5 or $10 million or $15 million, and they're able to go buy a company doing $2 million in sales and throw a ridiculous amount of money in marketing at it, grow an area and hire people and grow it to people faster. So in addition to the experience and the knowledge they have, now they have the capital behind them.
Are they staying within HVAC? Is this staying within the same trade?
Yes, some of them add trades. They did well at their previous company by adding plumbing or electrical to HVAC or vice versa. I have a buyer right now from New York buying in Florida, and he wants to buy single trade because he knows he can add multi-trade to it and automatically explode the business. And that was his system. His system was adding other trades to an existing location. So he can buy a company for less than what it would typically go for as multi-trade, add the multi-trade to it, grow the business, and then sell it.
That's interesting. And I guess this is another good segue is in this market segment, less than 10 million, do you deal with any multi-trade or no?
8 million and above. I've seen people
Yeah.
try to get multi-trade smaller, and it's typically not something that I would suggest. When they ask me, I'm doing $2 million in sales, should I, in heating and air, should I add plumbing? And my answer is always no. If you're doing under $2 million in sales, you haven't figured out the heating and air side yet, much less to go add another trade to it. So if they are doing it, it's not as profitable because they don't have the bandwidth to handle it all.
The systems and the scale are not in place where you can just add plumbing or roofing, electrical, whatever. I guess I've never really seen that actually. No one adds roofing onto HVAC and plumbing, do they?
I see roofing has become very attractive to private equity and to other investors.
I've seen that too, but nobody's bolting that onto a brand that has HVAC or plumbing.
To me, it's been a different business model. Typically, traditional trades, plumbing, electrical, heating, and air, are service-based and trying to be recurring revenue, where roofing, if you're having your roofer back every year, chances are you don't like your roofer.
You do not want to ever see a roofer. You don't want to ever really see him for 20 years or whatever, depending on where you are. Although down there, Florida, you guys are what, under 10 years? What do you rip through roofs in? An asphalt roof?
I think it's 10 to 20 is depending on storm.
Now that I'm saying this out loud, asphalt roofs are not very common down there, are they?
Yeah, they are real common.
Oh, they are common down there? Okay. In my head, it's, I don't know why. My picture of Florida is mostly like terracotta and stuff like that, but that's probably like, I don't know, just because the pictures you see are all the multi-million-dollar homes on the ocean.
All neighborhoods that all have terracotta.
Right,
the country, we have a metal roof on my house.
Oh, okay. Okay. Yeah. Okay. So that answers my question. In terms of other trends this year going forward, can they expect the same sort of valuation multiples or multiples on their valuations? Or where are we at in terms of that from Q1 and 2 compared to last year?
I think we've seen some pricing pressure. Money's become more expensive. Combination of things. We had a relatively mild winter in most of the country. And so some companies' numbers are down. And so they haven't been growing like gangbusters. And so I think it's a combination of expensive money, potentially a softening of the market has led to some pricing pressure, but not crazy numbers. It hasn't dropped drastically. Once again, you need to position your company better and market it better and get it in front of more people and do those things in order to continue to get those higher values.
So great question, because everybody wants, but most people want to get the most value or the most dollars out of their company. So company less than 10 million, you could tell them you're doing really well or whatever. You're at, I don't know, 3 or 4 million. You really want to increase the value of your company over the next 6 to 12 months. What is the number one thing that they should focus on to go from, I'm just making up numbers here, 5x to 7x or 5 to 6 in terms of their multiple?
Cleaning up your books and records. Many people, when they run a business, they run it to save taxes, not to show maximum profit. And many people are creative in their accounting, we'll call it. And so I'll have a lot of meetings or phone calls with people, and they'll say, hey, I'm doing $3 million in sales. And at $3 million in sales, I would anticipate them to be making somewhere around $450,000 a year. And I'll say, so are you making $450,000 a year? Oh, yep, that's right in line. Okay, great. And they send me their tax return, and their tax return shows they lost money. And so obviously we jump back on the phone and say, hey, this isn't what we said. Well, yeah, I am making it, but I'm paying for my ex-girlfriend's condo at the beach, and I'm got my car payments running through there, and remodeled the vacation houses. And so they run everything through the business to save taxes, but they expect somebody to write them a check for it. And so one of the easiest ways to maximize the value of the business is pay taxes and prove all the income that you're really making. So when we go to a buyer, we can hand them the tax return and say, there you go. There's the numbers. Any questions? Take a look at the tax returns. It makes us be able to command a premium instead of it being like, where's Waldo with 5 different spreadsheets trying to add it up. What went to the farm and went to the beach house and went to this house. And here's my ex-girlfriend's car payment. And so we've been taught as business owners to minimize taxes, which I completely understand. But if the ultimate goal is to sell, you've got to be able to prove that.
That's an answer that probably doesn't go over that well with people in general, but that's a great answer and not the one I was expecting.
Here's the thing with that. I don't mean to cut you off there, Zach.
Please.
If I've been creative with my accounting and the potential risk in me being creative is to go to jail. At the end of the day, cheating on my taxes, I could go to jail. So if you're a buyer and you come to me and you see that I have been risking going to jail for 10 years falsifying my numbers, but I'm going to tell you, wink, wink, that this is what I'm really making, how much faith you put in what I'm telling you? You have no recourse. If I'm lying to you, it is what it is. There's nothing you could do to me would have an impact on me. And so if I'm in a buyer's shoes, I'm reluctant to believe the person. How can I believe you? How can I trust you when you're giving me, grocery store receipts saying, here, you pay this out of the business? And so if you put yourself in a buyer's shoes when you're looking at selling, it drastically changes your perspective.
I would agree with that. And since you gave me the answer I wasn't expecting, we're going to go down the list. What would be number 2? I will limit your answer to would be like increase your maintenance, increase the number of maintenance agreements, decrease your overhead, which might go hand in hand. You need to increase lead generation. You're not getting enough leads per week or whatever. Things that might be material, again, material lift in a short amount of time. Obviously, the answer you just gave is great because that's super easy to do. You don't have to change the business at all. You just got to, like you said, take your G ride off of your P&L, right? Start paying for that yourself. But in terms of the business, day-to-day, operational, marketing, whatever, those efficiencies, what are the differences between, again, let's just say $5 million company, law of averages, that's selling at 4, I'm going low, and selling at 10x?
At the end of the day, it's going to be sales.
So for a $5 million company and, 10 of the markets in the country is they're going to sell for, give me the number. What's the number? 5x, 6x?
Yes, 6x. Do some quick math instead of guessing. If you're doing 5 million, my hope would be you're making somewhere around 750. 6x would be real on a company that size. As that gross sales number goes up, that multiple is going to go up with it. Once again, a buyer is going to see opportunity. If there's a lot of more gross sales there and they can come in and bring cost savings, they can automatically net higher. So the marketing in gross sales is going to be probably the most important. Second thing is going to be that maintenance, developing customer relationships. Buyers love maintenance agreements. There's not necessarily a correlation that says, hey, I've got 1 maintenance agreement, I'm going to get paid X amount more, or I've got 500, I'm going to get more. I can just tell you a company with a lot of maintenance agreements is way more profitable than a company without any. And so for a lot of different reasons, from opportunities in the home, customer paying for their own loyalty, better relationships, and there's all these things that go with that, but it definitely sells higher because their customers paying for their own loyalty, and the buyer knows that.
Especially if you're on a monthly, your MRR is something versus nothing, right? Like, again, on my side of it, if we come into a company and start asking all these questions about maintenance plans and structure and options on maintenance plans, and I find out that they're doing annual for maintenance plans, and this has nothing to do with our business, but I'd say this is just psychology. You want to charge for someone $240 a month once a year, or you want to charge them $20 a month 12 times a year. For you, that stabilizes your revenue month over month, as opposed to, getting these pops throughout the year that are very irregular and inconsistent. You're the expert here, but if it were me and I went into a company and we're looking at them and they said, we've only got, 5% of our customers are on maintenance plans or something like that. I was like, get your butt out there and market to your existing customers and get that from 5% to 20%, or get that as high as you possibly can, as quickly as you possibly can, to increase your monthly recurring revenue. The disengagement on those once they actually turn them on is very, very low, unless you do something wrong.
The Netflix model, right? I've been paying for Net for how many years, and how often do I watch a movie? It's the same thing.
I've come to find out I'm one of the weird Netflix people. That's like all we ever watch. We never watch real TV. I love Netflix, and that's probably the best $10 or $120 I spend a year. Heck, we went to the movie. We were down in your neck of the woods for spring break with the kids, and we had some pretty crummy weather and went to one movie and spent, family of five between tickets and concessions. I think it was like 125, something like that. So Netflix is a pretty damn good deal in the grand scheme of things.
Absolutely.
Last couple questions here. We already answered this, but when you were going through your company and we sold it to your son, correct? Did I understand that correctly? What would you go back and tell your son, assuming he's not selling it to you, but what would be the recommendations that you would tell, I guess, your son in terms of buying a company at that point in time, now that it's already been done?
Yeah, so he gets my advice daily, which I'm sure it's unsolicited and he probably doesn't want, but there's a lot of different things to look for. And so I've learned a lot since then, right? I've sold 119 of them since I sold my own. So the transaction volume has helped me look at things differently, more what to look for, what's important, kind of numbers, tracking the numbers, how long staff tenure been there, maintenance agreements, what kind of customer data is there. I get that from a lot of these bigger buyers. They're interested into customer data. Do you have a group you can market to? If you don't have a CRM in place, do you do any email marketing to your customers? Do you have their email addresses? Do you have their cell phones? What kind of data do you have from a database marketing standpoint? So I think it's a lot of the little detailed stuff that I didn't know 6 years ago.
This is probably a stupid question, but how many companies out there don't have CRMs right now?
Lots.
Oh my gosh. What on earth are you doing? Can I give you some business? Can you go find me one of those? That's like turnaround step number one.
I probably have 5 or 6 listed right now that don't have CRM.
That's unbelievable. Unbelievable.
I bet you at least 3/4 of my clients turn down as much work as they take on.
Because
They don't want to hire people. You can't find anybody that wants to work. I'm looking at retirement and don't want to go buy a new truck and have to put somebody in it and train somebody. So we'll just tell them to call somebody else. It's a lifestyle business. Happy making what they're making. That's the reality.
I did want to ask this earlier, and so I frequently do this a lot at the end of the podcast, and I get caught lying when I say there's only 2 questions left, and I had 5 more. So I'm going to add one. What is your model for taking on people looking for businesses? Is it a retainer?
No, so I've switched that. So the market's so competitive right now, and a lot of people that hire people, I'm biased. Let me say that first. A lot of these people that bring on somebody to go find them a listing, they go market and they send out all these letters, and I've got somebody who wants to buy your business. Well, the reality is it's a lie because they don't know if they want to buy your business. They don't know anything about it. They've got to get the information. If you have a business, let's use you as an example. A buyer comes to me and in your town, they're looking for a business. I reach out to you. Zachary, I've got somebody who wants to buy your business. You say, fantastic, I want to sell. Great, give me all this data, give me all these numbers, and I make jump through all these hoops, which they typically do, only for then my buyer to say, yeah, it's not a good fit for me, thank you very much. And now I walk away. And you've jumped through all these hoops, rightfully so, you're pissed at me. Why'd I just waste your time doing all this stuff to give me either a lowball offer or tell me you're not interested at all? So I don't like that model. It ends up burning a lot of bridges and making for unhappy people who are trying to run their business and get emotionally involved. So somebody really wants to buy their business for a realistic dollar figure and I come back with some garbage offer. So what I do, if somebody comes to me and says, hey, I'm looking in Tampa, Florida, I'll say, great. I'm going to turn all our marketing on in Tampa, Florida, and see if we can find a seller. If I find somebody that says they want to sell their business, I'm going to do a valuation of the business, and I'm going to tell them what it's worth in today's market. Not what you think it's worth, what the market says it's worth. If after that, if you have an interest in it, then I'll bring it back to you and say, hey, here's where it is, and here's what it's worth. And you can say, yeah, I want to buy it, or no, I don't. If you don't, I'll go to market and sell it to somebody else. And now I've got a realistic seller who understands real valuation, and we can go to market.
Seems pretty smart.
Well, we're just not burning bridges for the sake of burning bridges and messing up somebody's life. So I don't even say anything to the seller that I've got a buyer. I just say, if you want to sell it, do a valuation. If they agree with my valuation, then I say to them, hey, I've got somebody who may be interested. Can I present it to them first? We go to them, and if it makes sense, great. And if not, we go to market, find a buyer.
At the end of the day, you get a new client that you can represent in the market either way.
Or I don't, but at least I didn't waste their time and upset them, because selling's an emotional thing, right? We talked about it earlier. And so if I come to you and say, Zachary, I've got somebody who wants to buy your business, automatically you're on a level 10 from an emotional standpoint. And then I come back down and say, oh, never mind. They didn't know that you did any construction and they don't want you anymore. I've had you give me P&Ls for the last 5 years, jump through all these hoops, spreadsheets, meetings, phone calls, only to find out, no, you're not a good fit. That's just not fair.
Right. Yeah. No, I think that's really smart. Last question for real. So if you could wave a magic wand and go out to, and help all of the HVAC contractors sell their business, what would you tell them? And let's just pull away the two things that we've already shared here, which is get your books clean.
So get out of the van. It's a smaller company.
Interesting.
Well, you're limiting your growth. The reason most companies that are doing under $1 million in sales are there because they won't get out of their own way. They've got to be the best technician, the best salesman, the best everything at their company
Yeah.
instead of people to grow the business. So they won't let it grow at all. And then the others stay away from new construction. The ultimate goal is to sell. Buyers don't have an interest in new construction. I'm not saying it's not profitable. I'm not saying you can't make a bunch of money. I'm telling you, if the goal is to sell, staying in it will just new construction will help you.
Thank you very, very much for your time today. It was a great conversation. I learned something in general, and I hope everybody else does too. What's the best way to reach you? Or have you jumped into the direct message world on Facebook, cell phone, LinkedIn? What's your preferred reach Patrick at?
My website has all my numbers on it. I'm active on LinkedIn and Facebook. Direct message on Facebook is probably not the best way because I'm not on Facebook all day, every day. So just calling me directly or businessmodificationgroup.com. There's links, there's valuation. You can get a valuation done. You can schedule time on my calendar there for a quick phone call, or all my numbers are listed there as well. You can visit there and reach out, and I'm happy to answer any questions anybody has.
That's great. Businessmodificationgroup.com. Thanks, Patrick. For everybody else out there, hope you enjoyed this. Please subscribe below and go get them.